How's it going, everyone? Nathan here, and welcome back to my YouTube channel, where in this video we are going to be talking about part 3 of how to invest in the stock market as a beginner. So if you haven't actually watched part 1 and part 2, what I'm going to do is I'm actually going to leave the link in the description down below. I definitely recommend you go through it, because what we do is we're going through the step-by-step process of how to accurately and effectively invest and make your first purchase as a beginner. Now, if you've gone through those 2 videos, you've officially made it halfway, and let's keep moving on to part 3. So now you know what the stock market is, you have a very fundamental understanding of what's really going on, and you're no longer scared about all the market news that have come around. You've also been able to pick which broker you're now going to actually invest, or if you're not at that stage yet, you have a very fundamental idea about micro investing and you opened up an account. But at the same time, we are going to focus more specifically on the online brokerages, making a bit more of a larger purchase, because that's generally what people are looking forward to when they actually want to invest in the stock market. So you know where the online brokers are, you know which one to choose, and now you're ready to make your very first purchase. So what we're actually going to do is we're going to dive into my computer and actually understand what we're going to do step by step in how to make that very first purchase. And I do want to mention that depending on which broker you're going to use, my example is going to be through CMC. Each broker is going to have slightly different changes and variables in how they offer their services, but you have to keep in mind that each one leads to the same end result. So they're all going to be very, very similar in their terminology and how they explain things, and there's only going to be small differences in terms of whether you're using ComSec, NabTrade, or CMC or Self-Wealth. Just a quick reminder for you guys, if you are enjoying this content and you do enjoy this video in particular, make sure to give a like and subscribe to the channel, because it helps me grow and actually provide more content and more videos for you guys. And if there's something that you want me to mention, drop a comment down below so that I know what you're looking for specifically, and it gives me a direction in terms of the content I should be providing. So if you're ready for part 3, let's get straight into it. Alrighty, so what we are here, we're essentially in the CMC dashboard in my computer, and we're gonna go straight into making a purchase. So what I want to show you, and just keeping in mind that depending on the brokerage that you use, they're going to have slight differences and slight variations, but the most simple parts, for example, making and selling, are going to be very, very similar. So if we want to go straight to the top into the menu and go into trade and then buy, it's actually going to take you straight into the section where you are going to make your purchase. From there, it's got your details, how much money you have, and this is where you're going to be making, this is where the magic happens. This is where you're going to be making a buy. So for example, this first line is essentially each stock, each company in the ASX has its own ticket number, ticket symbol, and that's something that you would know based on the type of companies that you're researching and what you want to buy. So in this case, what we're going to look at is just Telstra. So as you can see here, they've got their stock price going up, going down, but this is what we're actually most interested in, the TOS. So if we take that back, and we type in TOS, it's going to pop down with Telstra. It's going to pop down with a whole bunch of different options as well. But this is the one that we're interested in. So as you can see here, going to the right side, what you're going to see is you're going to see another area which is pretty much live updates in terms of the amount of numbers, the amount of buyers and the amount of sellers currently going, how many sales of Telstra has there currently been, and any of your open orders. So an open order of yours may be if you were looking to get it at a lower price and you're just waiting for the price to match your buying offer. So moving forward from there, what we're looking at this point, you want to make sure you've highlighted the buy. So your intentions is actually to purchase this company. So in this line, you can either buy based on the number of stocks you want to have or number of shares, or you can actually change it. So for example, if I had $10,000 in my account and I wanted to buy $10,000 worth of Telstra, I would actually change it to the value and see how much you can get at market price. So for example, in the quantity, let's say I want to buy 10, and moving from there, I actually want to get it at $3.40. So it's actually going to then show me how much it's going to cost. Whereas with the value, if I actually just changed it, let's say I had $1,000 worth of shares, it then calculates it based on the price that you put in, so your limit price, and it will tell you the exact number of units, which is the number of shares that you will actually get from this transaction. So moving from there, the instructions is pretty much what you want to tell the online broker of how you want your pricing to be. So when it comes to the limit price is essentially whether you think that you don't want to buy at market price, you think the stocks are going to drop a little bit, and you want to get it there at that lower price. So if I know right now that it's $3.44, but I'm waiting for the stocks unit to actually go down to $3, I'm going to put in my buy order for the limit price of $3, and if the actual shares reaches this point, that's when my online broker is actually going to strike and make the purchase. So I get all these shares at $3 rather than $3.44. Whereas if you actually go at market, the at market is essentially the 3 steps between in terms of what it currently is priced at. So it does not care in terms of when the stock price is going to drop, when it's going to go up. It buys it at that point as long as the certain amount and there is someone selling it. So at the same time, you need to be aware of that. And the conditional order is essentially, it's similar to the limit market where you want to trigger it at a certain point. So if it drops below, that's when it hits straight away. But moving from that point on, we go to the limit price. So limit price and market orders are your pretty popular ones. Going from there, and your expiry, whether you only want to hold it for that one day, whether you only have it for that specific time, or you're not too fussed. So day only means to the end of the day, so that's when the stock's closed. Good till cancelled means it pretty much stays there and you wait until you no longer want to make that purchase. And select date is pretty much a date range. So from there, it actually shows you the price and the amount you're going to be paying. Keeping in mind the brokerage is $11 and the cost is what you do. So it's the price of the shares times by the amount of units you're going to be buying. These 2 sections here going down, stop loss and take profit, are more sorts of strategies for short-term sellers. Stop loss essentially allows you to cut your losses in a way. If you bought some shares and you put a stop loss on, for example, you put a stop loss on for them to drop another 10% before the brokerage actually sells them on your behalf. Because for example, if you bought some shares, you bought a company and then they dropped another 50%, you've lost a lot of money. So by having that stop loss in helps you to prevent that. And the same thing goes with the take profit, which is the opposite amount. But at the same time, both of them are more for short-term selling strategies and not really something that I focus on specifically. So moving on from there, just explaining it mainly in terms of the simple process of how you actually make your first purchase. From that, you only get better and faster at it. In CMC, you are required to put in a trading pin, pretty much just more so for security reasons. And that is something you're going to have to put in every single time you make a purchase. And once again, it's something you do when you actually create an account. Lastly, when you're all ready, making sure that you've completed everything and you're happy with it, because when you click this place order, it's going to put in your order automatically. And CMC is known for quite instantaneous purchase orders. So as long as the buying meets the selling, it's done automatically. Whereas something like ComSec, for example, is actually going to give you a second confirmation screen so that you can actually check. So this is pretty much just to show you how easy it is, how simple it can really be. And from there, we're pretty much done. So now that you've actually seen how to go step by step in making your first purchase on an online brokerage, there is a few things that I actually want to address. You made it this far, you're right at the end point. But it doesn't stop there, because anything you do that is going to feel slightly uncomfortable comes with objections. These objections are going to come around any single time that you're doing a daunting task or you're starting to feel fear. For example, if you've gone skydiving or bungee jump, the very first jump, the moment you're about to jump off, you are going to go through all of these things in your mind telling you don't do it, and that is your body objecting to fear. But you need to move past this, especially if you've done your research and you know in your current state, in your current circumstances, you're actually able to do this, and you're actually able to do this for a very long time. The type of objections that I hear when it comes to stock market investing are some of the following. What if I decide to buy now and the market drops the moment I buy in? Or for example, What if I wait till tomorrow and it may get cheaper? And the very last one is it's plain too risky and my money might be a lot safer just stashed under my bed. You have to understand that this is an investment. It's a way that actually helps to generate money in the long term. But anything that has the potential to make money can also do the opposite effect. Just as many people that have been making money, there are a lot of people that have actually lost money in the stock market. But at the same time, you never know the full story. Usually, as long as you actually plan your investment journey properly and you know exactly what stocks you're buying, the chances of actually losing in a 10 to 20 year period are quite slim. But what's actually going to get you through that point are actually figuring out what your investment goals are for this year, for the next 5 years, and for the next 10 to 20 years. Your investment goals are going to be the one thing that's going to help you venture through difficult times, such as a pandemic or the downturn, or even when it comes to fighting these objections, whether it may be your first investment or your 10th investment. You have to remember that the market keeps moving consistently. It updates every minute, every hour, and every day. So you're obviously going to see some stocks be up one day and then down the other day. So actually by figuring out your investment goals is going to allow you whether you want to be looking at this at that same type of time frame or whether you're only going to be looking at it once a year. So just remember, if you're actually just looking to make a quick buck, your variability in terms of your investment can go up and can come down a lot more. It's extremely irrational and you're actually going to be a lot more glued to the screen watching that price go up and tick it down. But at the same time, if you know what you're doing, if you know that the companies and stocks that you're investing in and you've done your research, it may be a strategy that you can actually pursue, especially if you do have a bit of spare income. But at the same time, it's not really something that you would be putting a whole lot of money in unless you are 100% confident in your ability. Where the stock market shows the most growth for the most amount of people in terms of a positive growth is actually investing in the long term. It's not an area that you want to save a little bit of money, but more so an area where you want to see drive most of your income and most of your wealth in the next 20 to 30 years as you reach preservation age. So the way I see it is to really succeed in life, to have the most freedom in life, you want to essentially make your money work for you and make money for you. So investing this into the stock market, it's going to work by two ways. The companies that you invest in are going to pay you back in the form of a dividend, or they're going to have greater growth, which means that your investments are actually going to have a positive growth. So if you're here investing into the long term, it doesn't matter whether the stock's just going to go up 10% and then down 50% the next day. All of that is negatory as long as you actually revalue your goals, understand what they are for the long term, and stick by them as you go through your first purchase. Alrighty, so that pretty much covers this video, and we could generally stop this series right here. You've gone from knowing exactly what the stock market is and what it actually has in terms of opportunities, all the way to finally making your first purchase. And right there, it's not the end, it's actually the start of your journey. But in the fourth video, I'm actually going to go through the different types of investing journeys that you could go through, which ones that I actually do personally myself, and why my investing journey actually suits my circumstances perfectly. So if you've enjoyed this video and you've actually found a way that you're investing in yourself, whether it might be reading a book, comment down below on the book or the articles that you're reading. What are you doing to actually get better? I'd really love to know. And once again, if you have enjoyed this video, I really do enjoy making these. So make sure to like and subscribe because it helps me understand where this YouTube channel is going and the type of content I can provide for you. I really appreciate your time. And until then, let's keep following the journey.